please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I got computers, iPads, phones, I'll do it all, Bill.
We honor our veterans on the Veterans Day commemoration here, both at the New York Stock Exchange and at the NASDAQ. And we'll get you set for next week's big week for retail, for tax reform, and GE's Investment Day on Monday. Stay tuned for the second hour of the closing bell with Kelly Evans. Have a good weekend, Kel.
Thank you, Bill, and welcome to the closing bell, everybody. I'm Kelly Evans. Declines for the major averages. The S&P and the Dow Jones Industrial Average. The Dow dropping 38 points on the bell today. The S&P down about 2 points. But as you can see there, both of them for the week posting their first declines in 9 weeks. The NASDAQ composite up just fractionally on the bell to 6750. And the Russell 2000 small caps were just about a half a point higher today, but they're still well off their early October record highs. We'll have much more on this. We also have shares of Alibaba more than doubling in price so far this year. And its biggest shopping day of the year, Singles Day, is underway in China. But excitement for the holiday may be waning. What it means for Alibaba and for this massive run up 112% year to date. We'll have more on that coming up. Joining me today is CNBC senior markets commentator Michael Santoli, CNBC contributor Evan Newmark on a Friday, and Joe. Thank you, Bill, and welcome to the closing bell, everybody. I'm Kelly Evans. Declines for the major averages. The S&P and the Dow Jones Industrial Average. The Dow dropping 38 points on the bell today. The S&P down about 2 points. But as you can see there, both of them for the week posting their first declines in 9 weeks. The NASDAQ composite up just fractionally on the bell to 6750. And the Russell 2000 small caps were just about a half a point higher today, but they're still well off their early October record highs. We'll have much more on this. We also have shares of Alibaba more than doubling in price so far this year. And its biggest shopping day of the year, Singles Day, is underway in China. But excitement for the holiday may be waning. What it means for Alibaba and for this massive run up 112% year to date. We'll have more on that coming up. Joining me today is CNBC senior markets commentator Michael Santoli, CNBC contributor Evan Newmark on a Friday, and Joe Duran from United Capital. Welcome, everybody. The biggest Dow winner this week was Disney on the back of that earnings report and reports that it held talks with Fox about acquiring assets. As David Faber said, it's not pencils down there yet. The biggest loser was Verizon in the Dow this week. Over in the S&P, the big winner was Macerich, the mall company, which had reports, of course, of Greenlight having a stake. The big loser was TripAdvisor, closed down 1% for the week, but we had some big swings this week after it reported disappointing earnings that affected the whole travel sector. Mike, we have a decline for the Dow. We're breaking a string of gains, but we've not seen anything like the kind of pullback that's typical.
No, it's certainly worth reminding people, Kelly, that we're a half a point below the all-time high on the S&P 500 right now. So a half a percent. So, yes, it felt like the market was kind of back on its heels pretty much all week, or especially the last couple of days. But in reality, it was just only jarring because we've had so little volatility. And I do think that the pickups in Disney and the other media stocks, retail bounced very hard this week. It kind of shows you that this rotational instinct is still there, and companies are busy. Quiet on the macro front, but on the corporate front, a lot going on.
What do you make of all that deal activity? I mean, what does it tell you about where we are in the cycle?
No, I don't know. I wouldn't make too much of it. You know, Mike and I, we've talked a number of times about how the typical signals you see in bull markets seem to be absent in this one. A lot of IPO activity, not really there. Huge M&A activity. We got sprinklings of it, but not what you would normally expect. And this rotation into the media stocks and the retail, to me, it's like a head fake. It's like, yeah, JCPenney, you know, the stock's down. I don't even know how much it's down on the last couple of years. But when these get these bounces, they're really dead count bounces. I wouldn't be overly excited about the retail sector overall.
Well, it was a big week for those media stocks, as you were saying there, from Disney's talks to by 20th Century Fox Entertainment units to solid quarterly earnings from News Corp. That was a big mover, one of the biggest in the S&P and NASDAQ today. Stock closed up more than 5%. It's up 10% for the week. There's optimism about a potential shakeup across the space, of course. But how much do you make of this merry-go-round?
You know, it's weird. It's like I don't you know, we talked over the last year about, you know, everybody's out, Disney, content is king, all this kind of stuff. And I really don't, I didn't like Disney at $120 simply because these companies have had huge runs, and I tend to believe that the future does not belong to the Disneys of the world. I'm not going to say that Netflix is the be-all and end-all, especially at its elevated valuations, but there's some nice singing going on here.
This is God Bless America, performed by the Six String Soldiers here in the day before Veterans Day. Of course, we can listen in. Soldiers again up there on the closing bell platform performing God Bless America in honor of this Veterans Day. Joe, let's bring you in here, and what do you think is going on across the media sector?
Well, thank you for that amazing lead-in, Kelly. It's not every day I get sung on to give my thoughts. And they're still applauding. First of all, I think what you're seeing, maybe 2 months ago, I was quite optimistic watching what was happening with interest rates and small caps both going up a lot. The last 3-4 weeks, I'm seeing the opposite. And that is of concern. If we don't see a rotation back to the small caps, to higher interest rates, what you're seeing is less and less confidence of this tax bill happening. A lot of concern about what it actually is, because it looks like it might, in fact, be more complicated than the existing tax bill. But more than anything, a lot more investments in momentum stocks like NVIDIA that is not transferring. So what I'd like to see is more rotation. Otherwise, I'm a little bit concerned that we're seeing more and more concentration to fewer and fewer names, and that's not great for the long-term health of stocks. So
Evan, what
again,
do you think
we saw
about the
a lot of good stuff
bill?
a month ago, not so much now.
I think it's a mess. I think I can look at it relatively objectively, even though it's probably bad for me as a high income earner in New York.
Company, right?
I'm sure. Trust me, I'm sure there are lots of accountants and lawyers out there figuring that out right now. So, but I can look at it objectively. It doesn't seem we're going to have a simpler tax code. It seems like the Trump administration is betting a lot on this idea that if you cut the corporate rate, not for big corporations, but the smaller, personal corporations, the limited liability companies, if you cut that a lot, it's going to create 4 or 5% economic growth. And I talk to people for whom this is going to be a benefit, and they're like, yeah, on the margin it'll help me, but they're not all going to go out and hire 24 people, and it's going to lead to some boom.
Mike, do you think the market weakness that we've seen, the choppiness, is related to this prospect of it not happening, even though Evan's not painting it as any great?
I think it's coincident with it. Look, the market has not been acting as if it truly needs the tax bill to pass. If you look at the kind of stocks that have been leading and lagging, it's not about all eggs in that basket right now. So I don't necessarily think that, but I do think the fact that the market is wobbly right now at a time when the challenges to a tax cut bill are more evident than the opportunities, perhaps. It's one of these excuses, and I think it also represents a market that has come a fairly long way, and everyone asking the question, well, what else is there that's going to kind of get us any further to the upside? So it's more of an ambiguous situation. I think it's a little more nuanced than to say it's all about the tax bill.
And by the way, and Joe maybe wants to address this, but the flat yield curve, there's divergence between what the bond market is saying and the equity markets. To me, I know we've been talking about this ad nauseum. In fact, I talked to Mike upstairs about it, and he looked at me like, not again. You're not bringing that up again, Evan. But it's true. I mean, you have a very flat yield curve. You can't have both things. You can't have equities. You can, but you shouldn't have equities. Yeah, but you shouldn't have equities trading at these kind of multiples, and the bond market saying
it's telling you that maybe the end of the cycle is within 2 years.
Right.
What should stocks do when there's 2 years to the end of the cycle?
Go ahead, Joe.
Kelly, I would add, it's been 370 days since we've had a 3% decline. It should happen 3 times a year. People are very accustomed. You have a lot of concentrated momentum investments like NVIDIA going from 30 to 215 in 2 years. When things get bumpy, that's what's going to hit, and it will hit the indexes a lot because they're price weighted, and these stocks have run a lot. Secondly, on the tax bill, we have 17,000 clients. This bill is great for thousandaires and billionaires, but for the millionaire next door, the executive who works in a big city, this bill is not apparently going to be a decrease. It might actually be an increase. That's going to create a lot of side effects that are not very good for consumers. Those are the big spenders.
Let's talk about retail for a second. Yeah, I hear you. JCPenney shares did soar up 14% today. This after the company reported a bigger than expected climb in same-store sales. Still, we're down about 60% this year for the stock. Guys, what do you make of it?
Look, all the department stores this week, I think there was a sigh of relief. Kohl's, Macy's, as well as JCPenney. JCPenney traded below $3 a share very recently before this. So in other words, it was at historic lows. But I do think that they're showing they can keep costs in line. They're stemming the declines in same-store sales for now, being disciplined on inventory. I don't know how much time that buys them, though, or how much patience that buys them from Wall Street. I just feel as if people say, okay, fine, this quarter looks like they'll be able to fight their way through it and play defense for a little while longer. So it's very hard to draw longer-term conclusions from these results.
Yeah. I mean, we've talked about these things are value traps. They're value traps. It's very hard to tick a bottom in JCPenney. Even if the stock goes to $5 and you could, quote unquote, almost double your money, I mean, that's a time play. It's very hard.
I would distinguish JCPenney from, say, Kohl's, though, because I think Kohl's is in a different position, has a different business.
The interesting thing to me was the way the stock responded to their earnings earlier this week, which was negatively while it was pushing Macy's higher, even though Kohl's is the one that's embracing Amazon.
Well, Kohl's then bumped up the rest of the week. It got an upgrade. It was up today. Target was up 2.5% today.
That I understand. Why was Walmart at an all-time high today?
Consumer sentiment was okay, and I think that the idea generally is a full employment economy should be decent for Walmart.
Also, their online strategy seemed to be paying off.
Also, consumer staples were up today. Walmart's a consumer staple.
One of those. Go ahead, Joe.
Kelly, I think Walmart is successfully making a transition to compete with Amazon. Its pricing is lower. It is becoming more digital. They are going to thrive. I actually feel quite good about what Walmart is doing compared to JCPenney. Just because they've gotten a lifeline doesn't mean they can survive. And that's what you need to differentiate here. I think there was a sigh of relief that their real estate is there and they're going to survive for another few quarters, but there's no winning strategy. Walmart is being rewarded for actually saying we can be Amazon, and that is what Disney is trying to do with Netflix. It's why they want to buy Fox, because they can, if they broaden their platform, they can become a platform and not just a content provider. So I think that both a lot of these big companies making really smart moves.
Yep, fighting back against FANG. It's actually been a busy week for IPOs, especially for Chinese ones. We've had 12 total IPOs. 3 of them are Chinese, including one today. And so far this year, there have been 11 Chinese IPOs. Today, it was the peer-to-peer lender Papadai. PPDF is the ticker. I'm not confident on how to pronounce this. But Michael, look, not a huge move here on the close. No. But I just feel like the market, there are so many names looking at Alibaba, looking at Baidu, looking at Tencent, and the kind of year they're having.
It's interesting because this latest spate of IPOs from China, it's mostly about the domestic Chinese consumption economy. It's not really about these huge platforms that could be global. It's not about the export sector. It's not about heavy industry. So I do feel like that's one of those, if you had a broker's cheat sheet, you wanted to sell a stock to somebody, you say, these guys they have a business in Chinese education or something else going on in the mainland that's benefiting from a growing middle class.
Chinese solar.
So it's a kind of an easy,
finance,
but also I think encouraging that these companies actually want to raise capital here.
Would you be cautious as an investor, Evan?
Yeah. I mean, I think that's true about the IPO market in general, and especially here. I mean, for your average investor out there, you might get lucky, you might get a flyer, you might get something that becomes the next so-and-so, but odds are, you don't want it to turn into a experience a la Snap, which if you go back to it, I was very skeptical at the time. And you basically said to them, for a millennial, take a flyer. So what if they lose half their money?
No, I said if they lose half their money, it'd be a good learning experience.
It would. Yeah. And a lot of them have had that learning experience now that they've lost half their money.
Good.
But I think it's...
No, you only take a loss when you sell.
That's right. That's right.
Joe, we'll give you the final word. You have Snap or the Chinese IPOs to pick from. What do you invest in?
Why don't we talk about China for a second, because it's basically what the U.S. was in the 50s and 60s. They have overtaken us for GDP. They're the biggest GDP in the world. They're creating a middle class for the first time ever. The problem is there's not enough equities representing that. So it's a crowded trade. They're bringing IPOs that maybe are, some of them fantastic, like Alibaba, and some of them that we just don't know. And there's not a lot of ways to play the Chinese consumer. So if you like that consumer, you can do it with US companies that sell to that market. So I would just, again, there are other ways to play that same market with knowable companies, with easy to read balance sheets and income statements that you can trust. So again, it is a massive opportunity and a multi-generational one.
All right, Joe, thank you very much for joining us, Joe Duran. Coming up, what do Oscar-winning actress Nicole Kidman and NBA superstar LeBron James have in common? They're both part of Alibaba's Double 11 Gala to celebrate the Chinese e-commerce giant's online shopping event. We're going to talk about what Alibaba's moves mean to China and to retail coming up. Also, GOP leadership in the House of Representatives and the Senate have released their separate tax plans. There are some similarities and some big differences. President Trump abroad in Asia is yet to weigh in. Ahead, we'll talk to two tax experts about how these bills may shake out and the impact on the market. And we want to hear from you. Contact the show with your thoughts on Twitter, Facebook, or email. We will read some of your responses at the end of the show. We're back in 2. Singles Day is well underway in China. It's already been setting some records. Eunice Yoon has the latest tally out of Shanghai. Eunice?
Hi, Kelly. Well, it's the middle of the night here, but Chinese are still racking up sales of everything from smartphones to TVs to dog food. There's even a Chinese company that's offering up a lifetime supply of Baijiu, the Chinese liquor, for 11,111 renminbi, or about $1,700. Now, analysts say that within this 24-hour period, they expect that this number could go as high as $24 billion. Now, you know the history of this holiday. Singles Day started as a day for lonely hearts, but in 2009, Alibaba transformed it into this massive shopping bonanza, and people watch it for Alibaba, but also to get a sense of what Chinese consumers are doing. And Alibaba's Jack Ma believes that Chinese consumers are going to change the way they shop. And so he wants the company to leverage all of its technology, its know-how, its big data, and to integrate it into physical stores. And that's one of the reasons why he invested about $8 billion into malls, department stores, as well as supermarket chains. And the supermarket chain is being held up as an example of what the future of retail can really be here. It's called Hema, and it's sort of like this Chinese high-tech version of Whole Foods. And the idea is that Chinese consumers go into the grocery store, they scan different products, they get more information about it, and then they could also order online all these different groceries and have it delivered to their homes within 30 minutes. Or they could go to the checkout counter at the end of the process and have their faces scanned with facial recognition software in order to pay. Now, the technology is interesting, but what's also interesting is the pricing of it all, because Alibaba, through these physical stores, wants to standardize the pricing of online and offline, even though physical stores, as you know, are expensive to run. And I asked the PR about that, and he said that this is all a long-term investment because they do believe in this new vision. Guys?
It's quite something. Eunice, thank you again. Staying up all night for us. We really appreciate it. Eunice Yoon in Shanghai. It's not just Singles Day shoppers who love Alibaba. Hedge fund managers are buying up the stock, according to recent filings. And on top of that, according to FactSet, there isn't a single analyst with a sell rating on the stock. How long can this euphoria last? Joining us is Stacey Widlitz, president of SW Retail Advisors and CNBC contributor, and Yusuf Scully, who's managing director of internet and digital media at SunTrust Robinson Humphrey. Stacey, is it euphoria or is Alibaba delivering the goods?
They're delivering the goods. You know, it used to be Singles Day, now it's Global Shopping Festival Day, so now it includes everybody. And it's very different than, you know, a Prime Day. It's, first of all, it's 18 times the size, and second of all, it's about fun. It's about entertainment, whereas Prime Day and Amazon is all about just price and avoiding the degrading mall.
Wow. Yusuf, why doesn't anybody have a sell rating?
Well, if you look at their growth rate, it has been accelerating, if anything, at their very, very large size. So with accelerating growth rate and with profit margins north of 50%, it's really, really hard to argue against it.
Alibaba, though, memorably had stumbled a little bit out of the gate after its IPO. What's happened, Yusuf, that all of a sudden it has this traction now and it's doubled year to date?
Well, I think so. A few things happen. One, they continue to execute really well on the commerce side. The other is they've taken a page out of the Amazon playbook, invested heavily in the cloud. So they went from nowhere to being the largest player in cloud computing in China. And through some acquisitions and some natural expansion or organic expansion, they're becoming quite a force to reckon with in all of Southeast Asia. So they've dramatically expanded their addressable market. And, you know, it's just becoming very hard to compete with them.
So, Stacey, should we not believe, there was the Wall Street Journal today saying that Singles Day as a phenomenon might be losing a little bit of steam. Does it matter for Alibaba? I mean, is it a stunt to begin with, or is it material for their, you know, annual results?
It's material, and that's really why they changed the focus from Singles Day to a wider net here. And, you know, you look at $1 billion was done in the first minute today, so it's very significant for them. And if you think about China, 18% penetration online because there aren't stores near everybody in China. So they've got a 50% market share, and certainly the government behind them. So good luck to anybody challenging them.
What about competition within China? I know Baidu and Tencent, I mean, they're all rallying this year for different reasons, kind of like Fang has been rallying, and they're all in slightly different niches in the U.S., but can Amazon compete? I mean, is there anybody who could challenge Alibaba's dominance?
Well, Amazon tried and kind of retreated, and we'll see what they do. But obviously, JD is the biggest competition. They've got about 30% market share versus the 50% for Alibaba. Amazon's only got about 1% market share. So they've really got the lead. And again, they're using these fun, exciting events to get the consumer involved. They're going to have almost 96% engagement on the Global Shopping Festival today. Can you imagine those kind of numbers involved?
Yusuf, where do you see Alibaba shares then trading if the fundamentals you're describing continue to go in their favor?
So we have a buy rating. We have about a $210 price target relative towards stock trading today, about 180. A couple of risks I do see going forward, though, is one, as Alibaba expands beyond China, the protective moat that they've benefited from within China, they're not going to have. So, for instance, as they go into India, Amazon is already there competing very aggressively. As they go into Western Europe and maybe eventually into North America, they're going to be hard-pressed to compete against Amazon and other players. The other thing is expectations continue to ramp up. And as they continue to grow, it's going to become harder and harder for them to exceed expectations. And to the extent that they continue to very aggressively invest in the business, there is at some point the risk of seeing them maybe meeting expectations as opposed to exceeding them. And that's usually when the stock will be hit.
Stacey, we got to go, but if Amazon Prime Day starts to look more like what Alibaba's doing, what would that mean? What would it look like?
I think it would be a really smart move, because that's what we need in retail. That's what we need in shopping, is entertainment and fun, not just focus on pricing.
And shipping.
And free shipping.
The history of American retail is it always comes down to price.
Of course. But
always
nice?
Comes down to price.
One can dream.
You can throw a circus in there. Stacey, Yusuf, thank you both. Stacey Widlitz and Yusuf Squali. The king of comedy is getting dethroned. Superstar stand-up Louis C.K. is the latest entertainment figure embroiled in sexual harassment charges, and Hollywood is taking action. How major media players are handling the sordid headlines next. And is the Bitcoin bubble finally bursting? Prices taking a big hit over the last 48 hours. That's coming up in today's Takeaway. Closing Bell will be right back.
Hey, Kelly, the latest in the Hollywood harassment fallout, Netflix is pulling Louis C.K.'s upcoming stand-up special. Louis C.K. responding to allegations in the New York Times of sexual misconduct, saying, quote, "These stories are true," going on to say, "I have spent my long and lucky career talking and saying anything I want. I will now step back and take a long time to listen." Netflix saying, quote, "The allegations made by several women in today's New York Times about Louis C.K.'s behavior are disturbing. Louis' unprofessional and inappropriate behavior with female colleagues has led us to decide not to produce a second stand-up special as had been planned." Now, this is on the heels of Kevin Spacey facing allegations of sexual assault, fired from House of Cards, and also disinvited from an HBO comedy special. And in an unprecedented move, edited out of a movie called All the Money in the World, which is scheduled for release on December 22nd. Sony's TriStar is replacing Spacey with Christopher Plummer, doing reshoots and using visual effects. The studio saying, quote, there are over 800 other actors, writers, artists, craftspeople, and crew who worked tirelessly and ethically on this film, some for years, including one of cinema's master directors. It would be a gross injustice to punish all of them for the wrongdoings of one supporting actor in the film. This, of course, is a massive undertaking to change this film with just 6 weeks before it's scheduled to be released. Back over to you.
And for Netflix, the big deal for them, too. I mean, I don't know how much we don't have the ratings on his comedy specials, but, they're not hesitating to pull the plug.
Yeah, it's interesting, Kelly, when you really see these companies doing the calculation, and it's not worth it for them to be affiliated with people facing these kinds of allegations. And so it's really better for them to cut the cord, even if it costs a lot of money. I would presume that these reshoots for the Sony movie are going to be incredibly expensive, but they think it's worth it. And look, it might even drive more interest in the film for people to see what it looks like when you replace a character so close to a release date.
Yeah, I was wondering that, too. Julia, thank you. Julia Forston. Time now for a CNBC News update. Let's get back to Contessa Brewer. Contessa?
Hi there, Kelly. Here's what's happening right now. Al Gore is attending UN climate talks in Germany, and he says more than 100 businesses in the United States are committed to reducing greenhouse gas emissions, and that will maintain the U.S. allegiance to the Paris Climate Accord.
Under the legal terms of the Paris Agreement, as some of you know, the first date on which the U.S. could actually legally withdraw coincides with the day after the next presidential election in 2020.
Ivanka Trump joined Senator Susan Collins on the stage in Maine to talk about tax reform. Ivanka says the bill is a key to the president's goals of growing the economy and helping the middle class. Collins says she favors income tax reform and relief, but is not ready to back the Senate proposal. Two Chicago lawmakers are proposing a city ordinance that would fine people for texting or talking on the phone while crossing the street. The fines would range from $90 to $500. That's a whopper. A similar bill went into effect in Honolulu last month. But, if it saves lives, priceless, right, Kelly?
Look, I know Chicago just needs the revenue, but I love this.
Yeah.
I wish everyone would. I wish they'd adopt this nationally.
It seems like a no-brainer, but you shouldn't have to tell people to put down their phones while they're crossing a street.
Yeah, but you do. You have to tell them.
I want to impose this law in my apartment. My daughter is for.
What we will no longer do is enter into large agreements that tie our hands, surrender our sovereignty, and make meaningful enforcement practically impossible.
State and local deductibility has been in place since 1913. It has been something agreed upon by Democrats and Republicans throughout. Once it is gone, you will never see it again.
Disney shares dipped after missing expectations on both the top and bottom line, but the stock then turned positive during Disney's earnings call.
Our plan on the Disney side is to price this substantially below where Netflix is.
We have a chance to make 20 times our money over the next 15 years.
Au Bon Pen and its acquisition is not about me. It's a powerful strategic acquisition that enables Panera to do an even better job in hospitals, universities, and transportation centers.
Alibaba Singles Day is now well underway. The company's saying they hit sales of $5 billion in the first 15 minutes.
Things are off to a very rapid start. This year we expect it's going to be a much bigger event, given that we've got 140,000 brands participating.
Although I guess we're supposed to stop calling it Singles Day because it's for everybody to experience.
I used to work with Mike Evans. Now I see what he's doing. Interesting.
Are you going to go join up with him?
I'm not going to China.
Yeah. You see that big tank with the crabs?
Yeah, I think I'm going to. I can get crabs here in Chinatown or something like that.
Let's get to the takeaway, shall we? We begin today with a major setback for Uber over in the UK. A labor tribunal rejected Uber's argument that its drivers are self-employed, so Uber will have to treat them as employees entitled to minimum wage and paid time off. This after London barred Uber altogether back in September. Will this damage Uber's prospects to go public by 2019, which the CEO just yesterday said is his goal?
I don't know if this one in itself will damage those prospects, but if it broadens out from here, I mean, even some states in the United States, they've had some kind of friction when it comes to all this. I don't know if it doesn't implode the business model, but of course they were already kind of this soft ban or preliminary ban.
Certainly
in London
endangers the business model somewhat if you have to now treat them as employees, Evan.
Until they get to be an autonomous transportation network.
Which is why they're pushing.
I'm not the advisor to Uber, but if I was the advisor to the CEO, I would tell him, you know what, just be quiet for the next 6 months. 9 months, just run the business. Don't talk about IPOs. Don't talk.
What's wrong with them saying they want to go public by 2019?
Because I think it creates that becomes the story instead of running the business well and profitably. It's a distraction.
Are they or aren't they?
It's distraction, and then everything becomes and gets seen in the light of the IPO instead of running the business. Right now, we're having the discussion. What is it about? Oh, is it good for the IPO? Is it bad for the IPO?
Yeah, but I think
it should be about, is it good for the business or bad?
My takeaway from this whole episode with all the drama and all the turmoil at the top is that the business runs itself. It's at a point where the app is the app.
I want to see
the drivers are part of the
That's
network.
why I wish they were public. Next, the price of Bitcoin has been whacked $1,000 off its high in the last couple days, while the price of Bitcoin Cash has been surging. Some say that's because Cash offers lower transaction fees. Meanwhile, the SEC is talking like it considers most initial coin offerings to be securities now, and thus subject to their laws. Guys, is the crypto bubble popping?
The nature of bubbles, if it is a bubble, is that it seems like it's going to pop dozens of times before it does. Honestly, what's the right price? I mean, there isn't a correct price.
It feels to me like we have not hit mania yet. There's been...
It's in the process, seemingly.
What do you think?
I mean, I'm not a huge fan of the thing. I think as long as there is a market for people to launder money, evade taxes, and want to do transactions outside the purview of the law or sovereign governments, there will be a market for that. How you put a price on what that market is, I don't know.
Yeah, I mean, that's the ultimate kind of like most committed end user, arguably. But right now, this price has hit escape velocity beyond the size of that activity.
No, I understand.
It's all about
all I'm saying is,
building
as
the
long
network.
as you have guys like your friend Bill Miller, and you got a lot of Wall Street guys and hedge funds.
Incredible year.
No, but they had an incredible year because this is exactly the kind of momentum play that he piles into.
He has a whole argument for why Bitcoin.
By the way, everybody can give you an argument, and that's the way all bubbles operate. There's always an argument behind it. There's always an argument.
Is the amount of implied energy use for a basic transaction?
It's a good point.
It's just
That's a good
off
point.
the charts.
It's very high. Finally, Russian fake news may be manipulating energy markets. Facebook, Twitter, and Alphabet's Google are giving information to Congress, according to Bloomberg, in a probe of Russian anti-fracking and anti-fossil fuel ads. Now, here's my question. Even if that was happening, does that amount to manipulating the energy market?
That was my exact question. I mean, basically putting propaganda out there about a political position that may or may not be inferred as bearish for an asset market.
By that, you could say that Greenpeace was manipulating energy.
Yeah, exactly. I mean, maybe they want to get at just the magnitude of the efforts to spread disinformation, but that's separate from a
Or does
market
this go
manipulation.
to Twitter's recent announcement that it's going to make it transparent who funded every ad on its page? If the argument is, look, you don't know that it's Russia that's against fracking, but if you did, you'd take that ad information differently?
Perhaps that's it. But yet, again, I see that's still a leap to get to a true market manipulation type charge. I mean,
yet another reason why I so do not like the world of social media and what goes on there. It's all. You can Twitter away, Mike Santoli. You're a journalist. You can Twitter away, Kelly Evans.
Yes, I'm not Twittering. But we want your take on today's takeaway. And guess what? You can message us on Facebook, Twitter, or over email. We may read your response on air at the end of the show.